Hello, Zinger Nation. This is Justin Roberti with you again on Web3 Anarchy. Thank you so much for joining us here today. We have the honor and distinction of having Mr. Scott Melcore, the Wolf of All Streets, join us, and it's a great day for it. I think that we could use a little bit of good advice at the moment with the markets being what they are. So let me go ahead and bring Scott out. Hey, Scott, how are you?
What's up, Justin, man? Thanks for having me. It seems that I end up somehow on streams and TV every time the market is massively dumping. I'm like a jinx, I think.
But I thought like this is actually the perfect day, isn't it? Because people need a voice of reason, and that's you, Scott. You're here to talk us all down from the fences.
I try, and I think it's important to always remember that we've been here before. Maybe you haven't been here before, but the markets have been here before. And we always come out of it stronger. It's just very, very frustrating trying to figure out where the bottom might be, wondering what you should do, how you should react, what the next piece of news will be, what the great catalyst will be. When in reality, the best thing you could probably do is turn it all off and go play a round of golf.
Is that how you feel on a day-to-day basis? You know, like on the one hand, content creators like us are helping people follow crypto on a daily or hourly basis, depending on your appetite for content. You can find somebody to satisfy it. But on the other hand, is it healthy to follow the markets on a day-to-day basis, or are you kind of stressing yourself out to death potentially?
It's absolutely unhealthy, right? And so the problem is that for us, obviously, it's somewhat our quote unquote job, right? To be on top of this. I write a newsletter every morning. I do a stream. I'm on Twitter all day. I'm staring at this at the risk of my own mental health, right? Because people forget that we're talking about it, but we're real people with real portfolios, right? And if you've been holding, if you're majorly exposed to almost anything right now, let's be honest, but crypto and altcoins and stuff, your portfolio is probably down 70% from the top in December, right? That's not fun for anyone. But I think that most people should be investors and not traders. You're going to lose money trading. 95% of people do. And so traders need to look at charts every day. Investors don't even need to know what a chart is. I like to joke that like generational wealth has been accumulated since the beginning of time by people who have simply bought something and waited a really long time to sell it or never. Right. All you want to do is take money that you can afford, not afford to lose. I think that's a misnomer, but that you can afford not to touch for a while and put it into something and generally let inflation and time do the work for you. Right. So the people who've made millions and millions of dollars in markets, most of them have never traded at all, have never looked at a chart. They've simply allowed inflation and compounding interest to do the heavy lifting for them. And I think that's what most people should do. Check your portfolio quarterly. Rebalance, right? Look at it every 6 months. Figure out what you want to do at the end of the year if you're too heavy in one sector or something else. Investing should not be a daily active pursuit. It just shouldn't. It is for a lot of us because we feel comfortable doing it. But then people see that and they feel that they need to do the same thing when they'd probably be, like I said, better off at the beach.
Well, and the hype can be fun though, and it can be intoxicating. Like 2021, that was a good time. When are we gonna have 2021 again, Scott? You're gonna bring it back?
I don't know. We're doing it right now. We're just in Stranger Things, and we're in the upside down.
Oh, the upside down.
Yeah, because the funny thing is that it's exactly the same phenomenon, and it's the exact same emotional pendulum, right? In 2021, when you're going, first of all, 2021 was great until like April or May. And then it was terrible. And people forget October has been really the only good month since then. It's basically been a year of terrible, and October was amazing, right? But when you're on that ride and the FOMO's kicking in and you can't lose and everyone's a genius in a bull market, it's the same emotional pendulum, as I said, that's swinging the other way now drastically. Now, on the other side, you're thinking there's no catalyst. It can never go up. It can only go down. Everything's going to zero. 3-year recession or depression. And likely that's also not the case.
Right. So, and at this point, though, we've got Bitcoin down just past, yeah, the greatest low since in the past 12 months. On Monday, I believe Ethereum is down too. Altcoins are down. Apecoin that we're going to talk about especially today because I think it's a funny little coin. Everything's down. So nobody really gets to be smarter than anybody else in this particular case, right? This is really bigger than a crypto problem, isn't it? If you look at the things that are driving this.
Absolutely. This has very little to do with crypto, to be quite frank. And listen, I love talking about how crypto can be an uncorrelated asset. It's a great investment to have a small part of your portfolio. But when everything goes risk off, correlations go to one and everything falls together, right? And this happens to be an asset you can trade 24/7 and always has liquidity. First thing people are going to sell, hence, I think, the aggression. To give some context, I was checking a chart. We now have 6 weekly Bitcoin closes in the red in a row.
Right.
I can't find a time on the active charts on TradingView when that's ever happened. There was 5. 4 is the only time since 2014. So we're at 6, going into a 7th potentially right now. And we had 5 maybe around Mt. Gox in 2014. I mean, this is a historic sell-off in the degree of how long the bleed has been happening. We've had bigger sell-offs, right? I mean, you don't have to look to last May. We went down from basically 60 to 30 in 10 days. This is happening. This is less of a move in 6 weeks. But you talk about the macro. Obviously, everybody knows that the party has to end with stimulus. When you print 40% of the historic money supply that's ever been printed in 18 months, eventually that catches up, right?
Sure.
As I told you right before we were talking, we're looking at debt to GDP right now, right? Which is basically how much you owe versus, how much you're producing. It's 140%, right? People like to look back in the 70s and Volcker and how they tightened and the Fed was successful in tightening and getting inflation under control. Well, it was like 30. We're at 140, right? This is not the same environment, and there's no soft landing here, as everyone can see. The Fed has an impossible needle to thread here. And honestly, I wouldn't be surprised if now they have to turn around and start printing again and ease it, right? If the market gets bad enough, they're not going to send you into a depression. And it's going to be an endless cycle of pain, right? And so they just waited too long to deal with it. So, of course, everything's going down, right? Everything is going down. Crypto is not immune, unfortunately, to it. And that's the way it is.
Yeah, no, the line can't go up forever, can it? I mean, and that was kind of the feeling of last year. I knew last summer, I knew it was happening. I knew that that's what we were in, but it just feels so good when it's happening. Everybody in your Twitter stream is so happy.
Yeah, it's so good.
People coming to you for comfort during this time of need. What are you hearing from investors?
Yeah, I think people are really depressed. I one of my favorite people, Mike McGlone from Bitcoin. I always kind of have him on my show. He's this seasoned trader who was on the trading floors in the 80s. And he says, this is the time when historically, and he's been predicting this for weeks, months, that we would kind of see this. He's like, this is when you see depression, divorce, suicide, not necessarily in the crypto markets, but, Wall Street guys and stuff, because eventually the music stops and you're wrong. And it gets really, really, really ugly. But I think, again, it's important. There's never been a time when it goes down and never comes back up. Every high in history in every major market has eventually been taken out if you're patient enough. So now it's really about patience. The famous sort of Buffett quote, markets are a mechanism for transferring wealth from the impatient to the patient. 100% true. I mean, I literally had a friend who called me and was like, I bought Bitcoin at 65,000. I'm thinking about selling it now because I want to buy lower at 30,000. You could have sold that at any point between 30,000 and 65,000. And now is the moment that you're pulling the trigger. I'm not saying this is the bottom, but those are bottom signals. I mean, we just had the highest volume 4-hour candle this year, I believe, that closed just about an hour and 10 minutes ago. Last time we had volume that big was December 4th, when Bitcoin absolutely had a massive crash. And that was the low for a month. Right. I'm not saying this is capitulation, but when you see that much selling volume spike in a short amount of time, it tends to be capitulatory. Maybe we get one more low, something like that. Of course it can go lower. We know that it can go lower. Anything can happen here, but it's important to remember nobody knows what comes next. So stop listening to the doomers.
Below 30,000 lower?
Sure. I think that listen, what you really want to see is that epic capitulation wick, right? We don't have that yet, where price goes like from, maybe we get a move up to 32 here or something.
Mm-hmm.
I don't know. Reactionary bounce. You always get bounces in a bear market, right?
Right.
And then we just see one monster sell off to like 28, but it bounces back, right? Above like 30 in the same candle. That's the kind of thing you want to see. The big capitulation wick down. It's the same as the blow off top that everybody looks for at the top of a market, right? You get this huge move up, and then sellers just absolutely step in and crush it on high volume. So I think a lot of people would be looking for that, but the bottoms can form in a whole lot of ways. I'm not going to go out and call a bottom. I'm just telling you, it could be. And so, like, if you don't even think right now that the bottom could be in, even giving yourself a 5% chance, then you're emotionally detached from reality. And that's fine. That's what people do. But like, you have to be aware that it could go the other way of what you're expecting, right?
Right. It's interesting. So we have the Fed, of course, to point to in terms of one of the factors. What role is the global unrest, particularly the horrible invasion of Ukraine? What kind of role is that playing overall? And how the hell do you account for such a thing? Because now you're accounting for the vagaries of human behavior.
Yeah, I mean, I think you just accept that people are going to go to war and know that at some point that's going to become a part of it. But obviously, it's a bigger deal because it's Russia and the sort of monopoly on certain commodities, and we've all been down this rabbit hole before. I think that though it's extremely disingenuous to point to it as the reason for any of this. Right. I think you could say it's the straw that broke the camel's back.
Sure.
Would be potentially true. Like we were already about to crash, and here comes like oil prices pumping to 140 a barrel, right? But what's interesting, how much do you hear about that war right now?
I hear a fair amount about the war, but I follow it, so I don't know.
Right, but I'm saying let's take out if you were not a major part of the news cycle as we are. To me, it feels like it's not being talked about anymore. Everybody's, and that's sad, by the way. I'm not saying that's a good thing. I'm just speaking the reality. But I think that now it's all back to the Fed and inflation when people are talking about the economy and China lockdowns, right? Where we've moved on from the war to China supply chain issues. Not me. Well, I'm not saying we. I'm not saying we. I don't want anyone to get the wrong idea. I think what's happening is terrible. We just know that the news loses its appetite for something and they move on.
You're absolutely right. I mean, honestly, what's been surprising is that we paid as much attention as we have, if we're to be real. But like, I'm glad that we have. I think it's helped get things done. But I mean, let me ask you real quick. Like, here's one thing that's a difference. I think this is a war that is being fought, first of all, partially over social media. And then it's a war that's being fought more purely financially. I mean, the big shots we've taken at them is all these embargoes, but we act like they don't have impacts. And of course, they have economic impacts. And we've already been delaying. Like I've been convinced for years that we've been in a delayed shock from the financial impact just of the pandemic itself. The people out of work, people losing their homes, that sort of thing. Lots of hardship. Is all of that finally catching up with us at this point?
Yeah, I think that's exactly what it is. Like it's very hard to time the top and bottom of any market, right? Because markets can remain irrational longer than you can remain solvent, right? And so you see all the signals for a top, and then it takes 2 more years, right? And I do think exactly what you said is what's happening here. I mean, listen, man, we're in a world. In my lifetime, I'm 45. I can't remember where you could sell your used car back 3 years later for a 20% premium over what you bought it for.
Yeah.
That's not normal, right? The housing market has not crashed yet, but potentially is going to turn. If that happens,
keeping more people out and rents going up.
Yeah, I think that's really when the pain would hit. I'm hoping that does not happen. But anything I think can happen here. But yes, I think what you're seeing is that you had just like this massive balloon blowing up, and eventually they pop. And I think that's unfortunately what's happening here. That said, could just be a normal 20% correction, 25% correction for the stock market, and we get a decent inflation print on Wednesday, which is what I'm kind of trading on right now, to be quite honest.
Right.
And a move to the upside. right? The thing is, you have to remember, it's not about bad news. It's about how bad the news is worth what you're expecting versus what you're expecting, right? So if the Fed says we're going to raise 0.75 and they raise 0.5, it's good news, even though they're raising hikes, right? Because you expected worse. So if inflation even slows marginally, or if it goes down here over month, I think that could be a huge catalyst for at least a dead cat bounce in this bear market.
I'm going to remind everybody we're talking to Scott Melchior, really one of my favorite people in the space. He is Wolf of All Street, so you can follow him, Wolf of All Street.
I see the comments. I'm not Jordan Belfort or the Wolf of Wall Street.
We had him on.
It's just a funny play on words. Yeah.
If I can get Jordan to come back and talk to me about the market as well, that'd be great. He's like, you both have in common in that you guys are like so immersed. Like, I mean, do you go from the moment you wake up? Do you have something to take you away from looking at markets? Because like,
I'm a parent. So yeah, I actually try very, very. It's actually I talk about it all the time, but I try very, very hard to do that. I have a couple like pretty steadfast rules. I fail at these, but I try to not have my phone when I'm in that like those 2 real good hours I get with my kids each day. I try to get out of the house, hit some golf balls, do something where I put my phone down almost every day because I start working at 4 a.m. So, like by 7 a.m. they're up and I'm a soccer mom for the next 2 hours. I'm not looking at markets or anything like that. And then like I have a rule where I won't bring my phone into my bedroom at all. So if I'm like, once it's like time for whatever, unwinding and hanging out with my wife after the kids go to bed, I turn my phone off completely and don't keep it in there.
I find you stick to that. You're very disciplined.
I think you have to. I think it's forced, especially in crypto. It's one thing with stocks, right? It's one thing where the market is only open 30 hours a week or whatever, right? It's a joke. Crypto's 24/7, 365. If you don't force yourself to sort of have these circuit breakers, weekends, I mean, you could do this all weekend. You could do it all night. You could do it. You're going to burn out. You're going to burn out. You're going to hate it. And so when you're 24/7 in it, you find a way. You have to. But that came with time. I used to obsess over it very hard.
Is it worth addressing the Apecoin thing separately at this point? I mean,
I think it's a great story, but I think that like right now we're in this sort of systemic risk off thing where anything named coin is dumping, right? And aggressively and finding which one's dumping the worst, I guess, is a exercise in futility, but that's sort of what we're talking about. But it's a really crazy story, and I think it is sort of gives us a lot of insight into sort of, and listen, this is a Web3 podcast, right? So it gives us an insight into how kind of crazy that market is, where there's holes for us as far as scaling, what problems can be addressed in the future. Listen, like it's very early, right? It's very early. And I think Apecoin once again showed some glaring issues with Ethereum, which potentially could be fixed, obviously with their move to proof of stake. I think it showed some glaring issues with FOMO, but it also showed the insane value of the right NFT project with ownership of IP, right?
The strength of that brand.
Yeah. And so listen, 99% of those are going to be trash and they're not going to potentially ever do anything. But if you chose a Bored Ape at any point and you wrote it for the ape drop and, listen, if you owned a Bored Ape, depending on when you got the ape coin or if you sold it, there was a moment there where that was, your ape coin was worth more than your ape, right? Your ape was maybe 200 grand and ape coin was 220 on the drop, right? Of course, that dropped to about $70,000 in value a few hours later, but 70 grand for free because you bought a Bored Ape that you may have bought for $100 or 200 or $300, whatever. Right. And so I think it shows the power of community, the power of the potential of Web3, and also exposed a lot of cracks in the sort of facade of scalability. I mean, the entire Ethereum blockchain was basically broken because of the other side, land. And you had to own Apecoin for that. So, of course, once that's done, of course, you're going to see Apecoin drop. Right.
I guess that's true. Is it there's a whole like people are looking more and more just to be compensated for their time and attention, essentially. Like it seems like anytime it's the same thing that like LooksRare did when they came into the market. Everyone's like, "Oh, look at LooksRare with their trading volume." I'm like, "Well, yeah, no shit. If I paid people to do business with me, then I also would be. Or is this a new? Am I being a
amazing how successful you can be when you give people a shit ton of free money, right?
That's right.
If you've ever been on OpenSea, here's a bunch of free money to come use our platform. Yeah, makes sense. Yeah.
Right. I mean, so like, but are projects going to have to be incentivized in order to break out like that? Like, look at all the Apecoin is going for. And what bothers me about it is that from the point of view of like, I mostly do analyses of projects themselves, right? Like not necessarily following I talk to founders, I analyze, I look at the utility of the project, and it just seems like they're talking 100% about like future tense utility. And like, aren't we past that in 2022? Look at how much money is put into the space. No,
we're not, because there's like 10,000 altcoins and most of them have never built anything, right? So we're clearly not past it. We should be past it, but yet again, early. But listen, if you want to have that home run, that investment that changes your life, sadly, you have to be really early to get it, right? But I love Bitcoin as much as anyone. Bitcoin's probably not going to 100x from here.
Right.
You know, you know, if you got Apecoin at the right moment or one of these, it's definitely possible, right? I'm not, and that's not investment advice. I think that you have to understand that that's a complete spray and pray with like less than 1% of your portfolio that you hope goes up. And if you buy 50 of those coins, 49 of them might go to zero, right? It's just reality. But I think that there is potential sort of, if one of these becomes the big winner, that you could do exceptionally well. And listen, I think, you know, I think that I would rather own a Bored Ape than own Apecoin, right? Because I think that they'll still continue to do airdrops and there'll still be utility. Apecoin, interesting, but less interesting to me than the actual IP surrounding the Bored Ape that you own.
Yeah,
people are asking how much do I have in Ape? I see a question over there. I have precisely $0 in Ape. I've never owned it at all. Never.
You know, I mean, it's interesting. Like, if any NFT project would be able to pull it off, I imagine it'll be Bored Ape Yacht Club. Obviously, they've got a great brand and they've shown some ability to build the brand. Most NFT blockchain projects in general, they're not equally up to snuff in terms of their overall marketing and brand support. So, like, I can't imagine that the generative projects coming after them, even the ones that are currently in the top 10, are necessarily going to hold on to the same value. Do you see it happening? Are we looking at a great big bubble in NFTs? Could we make today more depressing than it already is?
Remember when I said it's hard to call a top? Well, I've been saying that for a year, right? Not that I think NFTs have incredible value. I think there's endless utility for NFTs. I mean, you can literally, you should be able to transfer your mortgage with an NFT, right? Really boring stuff that would change any place that we have a third-party toll collector in between two people transacting, an NFT fixes. It fixes so many things. It's incredible. But that doesn't mean that like lunatic lions and butthead badgers or whatever alliterative like projects we made up to knock off Bored Apes should have value, and they won't, right? Listen, that's fine, right? They can go up, you can make money, whatever, but like don't be under the illusion that you've found the next Bored Ape, right? And so yeah, I see Brent, who I know over there in the comments, saying boring stuff is the future of NFTs. I think that's true, right? I think we're seeing sort of one small fraction of the utility of NFTs right now, and the stuff that it replaces in the real world is what's going to be massive for NFTs. So I agree with that for sure. And so I think that there will be projects that will be insanely valuable, will do insanely well, but they're the ones that have leaders that are in companies behind them, like that have built real companies that are working tirelessly every single day to build the IP and the utilities around them. And it's I've literally collected one NFT project. I've talked about it all the time. My friend Micah Johnson, and I think is incredible artist, has Aku. And like, you know, I bought all the chapters of Aku, and now they've done Akutars, which are similar to Bored Apes. I believe that I will get utility out of that, and I've collected them, but it's the only one. Right. And I would have never even gotten interested in that if it wasn't my friend. Right. And people are saying, how about fine art and merch? There's a million reasons to use NFTs, but my dad told me something a long time ago that I'll never forget. He said, only buy art if you love it. Because if you think you're buying it because it's going to go up, you're just going to, I guess, have fun staying poor. He didn't actually say that, but that was the gist of what he said, right?
Yeah, that would have been a little mean spirit to have fun staying poor to young impressionable Scott.
I could see it happening. Yeah, I mean, but like if you're buying music NFTs, think of it in the same way that you thought about buying music. Supporting the artist. You buy it because you love it. You want to listen to it. You want to look at it. That's how I view NFTs as well. I think if you wouldn't project it on your wall or take 5 minutes to look at it, I think you're probably fooling yourself into believing you love it because you think the value is going to go up. And the minute the value goes down, those communities fall apart.
Are there any altcoins? Of course, everybody's taking a beating right now, so it's kind of hard to say. But projects that I've heard you talk about, projects that also really impressed me. Polygon's one, of course. Polygon has a deal with Meta. A couple. I really
announced. I think yesterday that the NFT platform is basically going to be built on Polygon. Yeah.
Right. And it is an incredible project. Having spoken to one of the co-founders. Very, very impressive. Actually, we're going to have them on 2 Fridays from now, everyone. So
Sandeep's awesome. Yeah, I've had him on my podcast, and it's great. Yeah.
I mean, so feeling pretty bullish about Polygon. What about like Polkadot? Also very impressive project, in my opinion.
So, yeah, I agree with that. And so like my approach, I've been saying this for a year and a half, anytime anyone asks, really hard to pick the winners of these small projects, right? So like, I think if you're the average person and you want some exposure and you want to be a little more, creative or aggressive, I think you just buy Polygon, Dot, Elrond for me, I love, but like AVAX, Solana, all the layer ones that you think will be competitive. No layer one, as we've seen over and over again. Solana goes offline, Ethereum gets frozen by NFT launches. None of them right now can scale to mainstream adoption, right? We love to talk about a billion people using crypto. Well, what the hell are they going to be using?
Yeah.
Right? It's not going to happen. So we need layer twos like Polygon to help that scale. But then that makes you believe all these layer ones will be successful. They'll do well. They'll just find their sort of niche and the one thing that maybe they're good at, the gaming one, the metaverse one, the NFT one. So I'd rather spread my money around and invest in the layer ones. And then you get the benefit of all those smaller projects that build on it, right? You don't need to go find the next 100X. You could just accept that, like, if there's a huge movement of gaming on Solana or something, you don't need to find the game. You'll just benefit from that movement by owning the layer one itself. So that's sort of the approach I personally take.
So right now, we're first of all, are we going into our 5th bull bear cycle? Are we in a bear cycle now, Scott?
All about time frame, right? So if you zoom out, nothing but higher highs and higher lows. There's never been a bear market in Bitcoin, but tell that to someone who bought it at 65,000, right? They don't want to hear it. Right. So I think that for me, it was sort of when we broke down on December 4th from like 52,000. To me, that was sort of the oh shit level that we're now sort of up in a bear market. And so for now, I think that, we're definitely, I mean, look at what's happening in the world, man. It's pretty ugly out there,
and right now, go ahead. Sorry.
But that shouldn't be scary. Like people, even like some of my friends, Wall Street, like we were talking today, it was a very aggressive group chat, of course. Some of them were like, I can't believe it. I'm like, yes, you can. Come on, we're 45 years old. We did the .com bubble. We did the Great Recession. You always forget how rough it is and how terrible it is when these things fall apart, right? Like I said, at the very top, we've been here before. Nothing new here. Nothing new here.
But no laser eyes in 2022.
I think there's still a few people, and that was kind of a top signal.
It's if I were talking, I remember from a conversation I had with Tim Draper at one point, he would surely tell me at this point that this is the time to really dig in, right? Tim
Draper, I guarantee, is buying Bitcoin. Right?
Yeah,
I bought some Bitcoin today too early at about 33,000. I think we're probably at 31,000 today. But like, listen, I want to own this stuff for the next 30, 40. I don't know how long I'll live. I'm 45, but hopefully we'll all be immortal by the time we're 70, right? And they'll find.
Well, we move completely to the metaverse, and then
so I'll be living. My mind will be downloaded in the metaverse. But I want to hand Bitcoin off to my kids.
Right.
Maybe Ethereum
Right.
too, and so for me, if we go to 20, okay, I'll buy some there too, but maybe we bottom here, and I bought some kind of near the bottom, and I think we're going to 100K and 300K and a million if you give it a long enough time, and I'm willing to wait. I have a low time preference, right?
Mm-hmm.
And so, yeah, I'm buying here. I bought a lot of stock today too, but
Right.
earlier, before the sort of tail end of the bloodbath,
Yeah.
and some of the most hated,
Mm-hmm.
like
You,
ARK.
is the crypto market following the Nasdaq, or is this just because everything sucks right now?
I think everything sucks right now, but it's certainly trading like a tech stop. But the thing
Mm-hmm.
is, you can't really say it's following. You can almost, which is crazy, but like I said, it's liquid. It's always open. You can almost say it's leading,
Mm-hmm.
right? Because you used to see like it dumped all weekend ahead of this horrible stock day, right?
Mm-hmm.
So it's kind of crazy, but like now that's the double-edged sword of institutional involvement, right? You want the
Right.
institutions, but we think of institutions as like, oh, we want Apple to buy Bitcoin, but the institutions that are buying it are a bunch of hedge funds who don't have a really emotional attachment to it, who are willing to dump it as fast as possible when they need liquidity. So that's not a great thing when the market is bad.
And is that why they're hesitant now? And is it really true to say that institutional investment is hesitant, or is it just not as all out as it was in 2021, which was exceptional?
I think we have more than 2021. It's just not in the places that we expect,
Yeah,
right?
well,
So
let's get back. Let's make that the last point. Where you were talking about that right before we got on. Where are you seeing it going? I mean, obviously, tons pouring into DeFi, tons are pouring into GameFi, like $1 billion in January, which is $1 billion in capital investment. Tons pouring into the meta space right now, metaverse right now. So where is it going?
all of those things you just mentioned and everything we've mentioned before. But I think the interesting part of it is that Saylor bought Bitcoin in August 2020, right? That
Right.
was sort of the catalyst for that next bull run. Then Tesla in January. Then Saylor had his conference in February with 2,000 CFOs, and every company was going to put Bitcoin on the balance sheet. They couldn't because of accounting rules, but that's not the point.
Mm-hmm.
And all we talked about in the bull run at the beginning of last year was every company is going to buy Bitcoin.
Right.
And we were completely wrong, because what
Right.
every company did was invest in venture capital to get into Web3.
Right.
10 million here, 5 billion. I mean, 10 billion here, 5 billion here, 20 billion. Now everybody like has Andreessen raises like 5 billion, it seems like every other week. And then you leave Andreessen and you raise 900 million of your own. People want to own the picks and shovels of the future of crypto. And so I think Bitcoin is kind of boring for them. The law doesn't really line up very well for them to add it to their balance sheet. And that narrative just did not play out as much as we wanted it to. But tens of billions of dollars are pouring into DeFi, metaverse, NFTs, GameFi.
Mm-hmm.
I mean, for God's sakes, you can now like earn crypto by going jogging, right? I mean, it's everywhere.
Right. Well, awesome. Yeah, like it's super easy to spend a half an hour with you, Scott. I really appreciate it. I hope that you come back soon. For everyone, follow Scott. He is Wolf of All Streets on Twitter, and also I believe that is the name of your YouTube channel as well. Is there anything else you would like to
They're
shout out?
at Scott Melker, SCOTTMELKER. But yeah, the name of the podcast is The Wolf of All Streets. But yep, you got it.
All right, I'll put that into here. And thank you so much. I really appreciate you taking the time to speak with us. Thank you, everyone, for joining us. I appreciate it. You have a great night. We'll take care.
Thank you.
Thanks, Scott. All right, thanks, guys. Everyone, hit like and subscribe. Like and subscribe. No Twitter Spaces today because it is my son Zachary's birthday. So happy birthday, Zachary! Love you. But we will be catching up on Friday. We're going to have the show organizers for VCon coming on, so that's going to be kind of fun. We're going to talk about what's coming up with VCon and also the series 2 of VFriends. And as I said, next week we have Polygon coming on. So stick around, guys. Thank you very much for joining us today. We think you are fantastic. Please hit that like and subscribe, and we will talk to you very soon. Thank you, everyone.